Good morning, everybody. Welcome to the morning call. I am Laz, and I am filling in for Scott today, who is out on the very last day of 2011. It is my honor and pleasure to be here to wrap things up for you. And what can we say about 2011 that we haven't already said pretty much every day going back for the last 365 days? I think the best way to sum up the year from a trading standpoint is by looking at a picture. We're going to look at that picture in just a second. But 2011, if I was going to put a moniker on it or a title, I'd call it the year of indecision. In 2011, we saw a clear market of haves and have-nots. We saw tech stocks rise. We saw tech stocks decline. We saw gold rise. We saw gold decline. We saw silver decline. We've seen industrials hang in there and keep this market intact. Globally, if you look at world markets, a lot of red throughout the year. Year to date, a lot of the global indexes have seen some pretty rough years. The only exception, I think, is the Dow, which was up, 4 or 5% to finish the year, plus or minus. So really, the Dow Jones, the only market that really has any relative strength to it. The Shanghai got, the Shanghai got crushed, and Germany and Italy and you name it. There was probably some blood on the streets in the global markets. That being said, let's take a look here at the S&P, which I think is really the best way to take a look at this. And I generally don't do this much, so let's go over here to the chart. Let's take a look at the S&P 500. And this is a yearly chart. What you can see here is a chart. Every candlestick represents one full year of trading. So we are looking at a very, very, long sample period going back here, and I'm not sure if you can see it, but this is the 1970s. This is where we start 1980, 1990s over here, and so on and so forth. 95, 2000, the peak of 2000. So you get a real sort of clean, clear look at what this S&P 500 is. Sort of the benchmark for our markets over the last, 30 years or so. But what we see here is in 2008, we see this big red bar. This is the impulse selling that we saw in 2008 and 2009, 10, and subsequent 2011. So what we have here is really a very, very nice retracement off of the panic of 2008. But 2011 is a pretty ominous candle. No forward progress. In terms of we are opening and closing basically in the same spot for the year. We have seen highs, we've seen lows, but a year of indecision as we are closing right where we opened. So not much gain here in the S&P. Like I said earlier, the Dow has a little bit of gain, but very, very small. And as a technician, this is a pattern I want to be very, very careful with. This is either a retracement pattern where we could see potentially in 2012, we could see an inside bar. We could see more consolidation. What does that mean? Well, that means that 2012's highs and lows could be within 2011's highs and lows. So we may not break out of this range. Other scenario would be a potential downturn. If we were to take out the 2011 lows, that's a clear sell signal that could lead to further decline. So we have to be very, very objective when we look at this chart, as this is what the marketplace has been telling us. Now, for most of us that are active traders trading, the shorter term ebbs and flows on the week-to-week, month-to-month basis, we're not really going to spend a lot of time looking at yearly charts, as they really only matter come the end of the year. But what this does tell us is a very, very, it's an early warning sign. Be careful. This is the type of pattern as a technician you have to be very, very careful about, as it does potentially lead to more decline. The rebar snapback off of a large impulse down bar. For those of you that have taken the active trading class, you're familiar with this type of setup. If this was a 15-minute chart, let's say, as an example, many of you would probably be looking for further decline here. So we have to respect what this market has told us over the course of 2011. Now, that being said, we can move over to some of our shorter term charts. And again, the S&P here on a shorter time frame, which is a daily chart, we could see a little bit higher. As we go into the early new year, we are setting up for what looks to be like possibly some more upside. We broke out of this A little bit of resolution here the last couple of days. We pulled back 2 days ago, and yesterday we saw another buying, more buyers step in to hold this high level. So we could see, again, some more upside early into next year if this shorter term pattern wants to stay intact. But I would keep an eye out. We should mark off the 2011 highs, which ultimately are up here, right around that 1375 mark in the S&P. So, lots of room in here to potentially see higher. We've seen some lower highs along the way. So let's just keep an eye out for what early 2012 brings us. Right now, we have no definitive, path. I'd say the short term is to the upside, but we'll see what happens early into next year. January and early into trading years is notorious for early sell-offs. So be on alert for, just be prepared, I guess is the best way to say it. As far as individual stocks, the stocks that I think have go-to leadership right now are the same stocks that have a go-to leadership for a long time. Apple, flirting with breaking higher. We can see Apple not really hasn't done much for the better part of the year. You can see where we are now at the 405 area is basically the same place we were, 6-7 months ago in July. Lots of ebbs, lots of ebb and flow here. Not much commitment to a direction for just really more periods of, a couple weeks here, a couple weeks there. We are in an area of resistance here in this chart, in this 409, 410 area. So keep an eye on that. As we do clear that 410 area, you could see a new thrust up to, prior highs and even potentially new highs. So something to watch. Google as well. Google bucking the trend here. I say bucking the trend, just acting very well, showing some leadership. Every day we're starting to see, slightly new highs, holding these short-term moving averages. You can see the 8 period here, which is the blue line, just curling under. This to me looks like it potentially, can go higher. We do have to pay attention to this short-term resistance level, as it does seem to make, new highs and then pull back. New highs, pull back. New highs. So we have to be on alert here. It's not, not one of these fast money trades. But like I said, there are a handful of stocks out there that do have leadership, ISRG, So you really have to pick and choose your battles here about where you want to be and why. Gold, which has been a staple for strength for a long time, actually, has become more in a much more clearly defined downtrend here as the, gold has been sold pretty much on every short-term pop. We got a little 3-day, 4-day bounce here. Again, new lows as of yesterday morning. So I would be hands off there unless you're looking for selling opportunities. Silver, the other precious metal. Silver's been weak for a long time. We saw that thrashing in mid-April of this year. A little bit of a snapback, but ultimately new lows again. So really just sort of a destruction trade, if you will, in the silver market. As we've seen for the better part of this year, the majority of the time, silver's been sold at every, opportunity. Some other stocks, GMCR, one-time high flyer, and you can see when these stocks really start to get hit, they get hit pretty hard. So losing more than 50% of its value in just 3 months, 3.5 months here. Netflix, another story stock for this year, where in July, just a few months back, 5-6 months ago, we were seeing $300 mark. Fast forward to December, the end of the year, the stock is trading at the $70 plus or minus price area. So, it is a market where you can be opportunistic both on the short side and opportunistic on the long side of the market. Again, pick and choose your battles wisely here. I suspect that trend, the trend of indecision, where you have the haves and the have-nots, will continue early into next year before the market maybe tips its hands and gives us some sort of directional trade for more than just a few weeks at a time. If we go back to the S&Ps, I think these ebbs and flows. If you look at the year of 2011, and we'll look at it here sort of on a weekly chart. Let's look to a weekly. So here's 2011 from basically this point going forward, and we saw aggressive sell-offs followed by snapbacks, followed by downturns, followed by upturns. So lots of churning, lots of short-term pops and short-term drops, and that really marked this year. So it became very, very difficult if you are a position trader, a longer-term trader, somebody committing capital for longer periods of times. This year was probably pretty frustrating as you saw the market sort of ebb and flow without any real sustained commitment for, like I said, for more than just a few weeks at a time. So it is good to be an active trader right now. Embrace the short-term opportunities. That is the path of least resistance. And I know Scott has talked about that probably being the trend continuing into 012. So it is a very good trading market right now. If you are a short-term trader, embrace what you have because at some point it might not be this opportunistic. And I think for 012, for those of you that are sort of making your resolutions, think about what you want to accomplish in 012 with your trading, what you did well in 2011, what you did poorly, what you need to work on for the new year. I do want to remind that we do have an outstanding active trader class that I think we had massive feedback in terms of just the value that it provided our traders in the T3 Live community. For those of you that went through that active trading program, something to consider going forward. My whole career, personally speaking, has been based on the fact that I am an educated trader. I understand the language of the movement of price, and I'm always looking to improve upon that. So we are anxious for what 012 brings. We are very, very excited here at T3 Live, and I do want to send a special thank you to all the viewers and subscribers to T3 Live for making 2011 such a fantastic year. And we hope that we can only better ourselves for next year and give you more value-added content and feedback and market analysis, as that is really our core specialty. So thank you very much to all of you. As we couldn't be here, we wouldn't be here without you. As far as today goes, it's probably going to be a very, very light day. I'll probably be trading personally for just the morning, and then I'm going to pack it in, call it a new year. There will not be a daily recap today, so this is the morning call / recap right now. And again, thank you very much for making 2011 great, and we look forward to talking to you in early 2012. Happy and healthy New Year to you all.